Welcome to the Perfect Trading Mindset course. My name's Mike. I'm the owner of Satoshi Trading, and this is Introduction to Trading Mindset. Now, today's lesson will be on understanding your beliefs and biases. Okay, so your beliefs and biases are going to be one of the main downfalls when you are a newbie trader or someone that's still thinking in a retail mindset. So, understanding and managing your beliefs and biases is going to be crucial for trading, as these psychological factors can obviously significantly influence decision making and your overall trading performance. We need to recognize common trading biases, don't we? This will help you become a better trader. One of the main ones is overconfidence, and the bias of doing that. Believing that you have more control over the market events than you actually do. It's one of the pitfalls that I fell into for nearly 3 years. As well as that is confirmation bias, seeking information that confirms your existing beliefs while ignoring the contradictory evidence. Okay, so you've got a trade that's in a bearish downfall, and you think that you caught the bottom and you catch it. You then wait for the pullback. It looks like it's going to go, and this is actually where it looks like it's going to break structure, and it doesn't. It just continuously falls after. So your confirmation bias of, yes, this has happened, and we've had a market structure shift, or we've had a break of structure, or we've had a first green day. So it's going to be after this fall and it's took the low, it's going to be a pump straight away. That doesn't always necessarily happen. So understanding that, and that you may be wrong sometimes, and if the information is saying otherwise, you need to go with the information, not with what you think is right. And as well as that, loss aversion. Now, this tendency is to understand that people usually try their best not to lose. Now, loss aversion is when people won't enter a trade because they're afraid of losing, and usually when they're right, they do not take the money out of the market. It's one of the biggest pitfalls that I went through as well. For about 2 years after I lost all my money in the first bull run, I consistently did not want to enter trades because I didn't know what I was doing. So every time that I went into the market and that I tried to understand why I was taking the trade, it confused me. So I wouldn't take it because I'd become contradicting my plans. And I'd be going, no, that was going to do this and do that. And my plan was right. By understanding that I stuck to my plan, helped me then to reduce the loss aversion and get rid of it. Anchoring bias. So, relying too heavily on the first piece of information that you see, like the price of which you bought a stock, is one a big problem. People usually look at one candle, they see it shoot up, and they do a bullish engulfing candle, and they think, "Oh, it's time to go! Let's go! Let's go!" They get in. The following candle is a bearish engulfing candle that wipes the bullish one out. Then you're like, what's going on? I've been there, done it, because I tried to take these patterns and all these trend lines, everything that you've been taught in here. Before I learned a way that I learned how to read the market, I used to blindly just go in and use my plan without thinking what I was doing, not understanding why and what the market was doing. I used to just follow my plan, and I got very lucky. But once I started understanding what the market does, price action, market structure, supply and demand, and then I created the playbook from all the best plays that I used to play on the markets. It then gave me a hindsight, and it helped me then to craft the better risk management and the better trading mindset. And this is where all these courses will come into play for you in the end. Not all these courses are going to be used, or just one course is going to change your life. You're going to have to go through everything, because you're going to have to find out what makes you tick. And I went through all that, but I found my way. And my way is using price action, market structure, and fair value gaps. But that might not be for you. You might like doing supply and demand. You might like using patterns and candlestick patterns and trend lines. You might like using just market structure. You might just find that works for you and you understand that perfectly. So you've got to find the right balance for you by making sure that you don't just rely on the one thing. Okay, so recency bias. Overemphasizing recent events over historical ones. Now, At the moment, we're in pullback in a bull rally, just about to enter into the 2024 bull run. People think the bull run started now. It hasn't. We've got a lot of economical damage going on in the world, and that's not actually had a repercussion on what's happening in the world. We've not had that happen in the market yet. We've not had that factored in. There's a lot of hype going around regarding ETFs, and at the moment, this is where the herd mentality comes in. The herd mentality is saying buy, 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 and soon that buy, 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 once the news comes out, the herd mentality are going to get hurt because they don't listen to the charts. The charts are saying that we have imbalances that need clearing lower, lower down in the charts in most tokens. These will then get cleared, and when these get cleared, we will then move forward. But people can't understand that. They just think that's it. We're going. That happened in 2019, and this happened in 2021, and this happened in 2013, and it's all the same. But they don't realize or factor in that there's a massive recession, the biggest one since 1930, that's about to hit us this year. What we may see, herd mentality might win. But for me, I don't trade with the herd mentality. I trade with the opposite. I trade my own thing. I don't go looking for long term because at the moment, most of the things are oversold to death. So I obviously wait for the pullbacks. I only trade things where I'm guaranteed a success with my plans. So making sure that you stick to that is going to help you more. Okay, you need to reflect on your beliefs, understanding your personal beliefs, and identifying that things that you believe in about the market and why. Are these beliefs based on evidence when you find them, or are they based on assumptions? So you've got to understand that when you reflect on your beliefs, is it that you talking or is it the market talking? If the market's talking to you, the market's usually right. And you've also got to challenge your assumptions. Regularly question your assumptions about the market and find out if they're still valid. Is that right? Is it correct? Is it changed? If you're not doing this on a regular basis and understanding your personal beliefs, you'll never get better as a trader. Okay, so emotional management. Being able to recognize emotional triggers. Identifying situations that trigger strong emotions like fear, greed, which we're going to talk about in a further video in the next module, or excitement and how they affect your decisions. I know that a lot of people, usually 90% of people, get sucked into fear and greed and excitement. They see everything going on and their eyes are what seeing the money coming in and they just get sucked in. The next minute, market collapses, they lose all the money, they get liquidated because they've not put stop loss on, they've not got a risk management, they've not got anything to tell them when to get in and out of trade, no plan at all, and that will then trigger emotional triggers. So, understanding that and recognizing your emotional triggers will help you become a better trader. As well as that, develop emotional discipline. Practice techniques like mindfulness, deep breathing. This helps you to maintain emotional equilibrium. This will help you to get better with handling your management for emotions as well. One of the things that taught me how to become a better trader is learning from your mistakes. Making sure that you review and analyze trades. Regularly review trades to make sure you understand what went wrong, what went right. Look for patterns in your decision making. This will help you if you're journaling to become a better trader. As well as that, have feedback loops. Create a system of feedback that helps you learn from your mistakes and all your successes. This will help you to get rid of the mistakes or narrow them down to create more successes in the long run for you. Continuous education every single day. I've been a trader for 7 years, and I know that I watch minimum of some good content, one, two, three videos a day, because it keeps everything fresh in your mind what you've learned. And yes, okay, sometimes people might get confused by looking on YouTube, but it doesn't necessarily mean look on YouTube. You've now got a trading floor here with Satoshi Trading. All you have to do is come in and look at some videos every day. Keep looking and instilling these videos and learn them. Keep doing the tests till you get everything right. And then go back and back test everything. That's what we want you to do with this. We want you to take the information, use the information, and then create the information. That's what the main purpose of the trading floor is here at Satoshi Trading. I mentioned just previously about journaling. for trading, and I've mentioned it before in other videos. What I want you to do as well is start journaling your emotions. Start documenting your trades, your thoughts, your emotions, not just per trade, everything you do in a day, your market observations, and things that you look at can be rather enlightening for you. Making sure that you review your journal on a regular basis, make sure that your entries to your journal help you identify any biases or an emotional patterns that you probably create over time and you don't realize why they've been created. Now, if you're not already doing this, you should be doing this. Everything in life is based on goals. If you want something in life, there's a certain amount of goals you're going to need to hit before you actually get this thing and manifest it in real life. So you've got to start looking at realistic expectations, set achievable and realistic trading goals. Things like $100 a week, and then $100 a day, then $1,000 a week, then $1,000 a day. Don't just go for I'm going to make 10K a day, because you'll never ever ever get to that point before making the $100, the $1,000, the $10,000. Do you get my drift? So, trading is not just about strategies and market analysis. It helps us to understand and helps us to manage our psychological makeup. Being aware of your beliefs and biases and actively working to counteract their negative effects is essential for making decisions, disciplined and trading analysis, and helping you to become a better trader in your mind. Okay, so this is understanding your beliefs and biases. I'll see you on the next video.